Welcome back to Dinar Current, a turning point in global currency. Thank you for joining us for what could be one of the most closely monitored moments in the international currency arena. Excitement is building rapidly as speculation swirls around a possible dramatic revaluation of the Iraqi dinar, some sources hinting it could reach as high as $3.90 United States cents per dinar. Even more intriguing is the rumored 17-day exchange period, which, if true, could mark a major milestone for dinar holders and global currency investors. Whether you're a long-time investor or just beginning to explore Iraq's economic landscape, this update is packed with crucial information. With potentially limited time and high stakes, understanding these developments is essential. Before we dive in, don't forget to subscribe, like, and hit the bell icon so you never miss an important update. Could the Iraqi dinar hit $3.90 USD? Let's begin with the headline-grabbing topic, the potential revaluation of the Iraqi dinar to $3.90 per USD. While no official word has come from the Central Bank of Iraq (CBI), this figure isn't without precedent. Analysts point to the pre-Gulf War era, when the dinar was valued above $3.50 United States cents, and cite Iraq's massive oil reserves and rising foreign currency holdings as strong backing for a renewed, stronger valuation. Supporters of this revaluation argue that it would symbolize Iraq's return to financial stability and international relevance. Yet, it's important to note, this is still speculative, and decisions should be based on solid research, not just optimism. The 17-day exchange window, what we know. Adding urgency to the speculation is talk of a 17-day period during which current dinar notes could be exchanged for a new series. During this limited window, both old and new notes would be considered valid. Afterward, while old notes may still be exchangeable, the process could involve more paperwork or longer processing times. For those holding dinar, especially outside Iraq, this possible exchange window demands attention. If it comes to pass, the decision to exchange immediately or wait for further developments must be made carefully, with risk and reward in mind. Why now? What's driving Iraq's currency reform? Why might Iraq be making these moves now? Several factors are converging: political stabilization, improved oil exports, and reforms in public spending. Updates to the 2023 national budget have resolved key issues, including tensions over revenue sharing with the Kurdistan region. Additionally, the government's ability to meet salary obligations and maintain foreign reserves has restored some public trust. International organizations, including the UN, have voiced support for Iraq's direction, signaling broader backing and potential partnerships. CBI's strategy, stability and structure. The Central Bank of Iraq has introduced specific mechanisms to foster a stable currency environment. Notably, the implementation of a 2% fluctuation cap on the dinar's value during designated periods. This rule aims to limit market volatility and instill confidence in both domestic and foreign investors. Another reassuring policy is the CBI's confirmation that old notes will remain exchangeable for up to 10 years, giving everyone time to adapt. Transitioning to smaller denominations. One of the most impactful changes ahead is the planned phase-out of large value notes, like the 250,000 dinar bill, and the rollout of smaller denominations, such as a 20 dinar note. This shift isn't just about redesign, it's about creating a more usable, inflation-resistant currency system that can support everyday commerce and discourage hoarding. Smaller denominations make daily transactions smoother and reduce dependency on the US dollar, helping Iraq move closer to currency sovereignty. What this means for you. For investors and currency holders, the message is, don't panic. Change is happening gradually, not overnight. The rumored 17-day exchange window and the 10-year grace period provide flexibility and time to prepare. Even if the dinar doesn't reach $3.90, Iraq's broader financial outlook is improving. Structural reforms, increased transparency, and reduced inflationary pressures all point to long-term strength. Stay informed. Follow credible sources. Consult with financial professionals when needed. And remember, major changes like these come with both risks and opportunities. Final thoughts. The road ahead for Iraq is promising. Whether or not the dinar reaches the predicted heights, what's clear is that the country is making bold moves toward a more stable and respected economy. What do you think? Is a $3.90 exchange rate realistic? How are you preparing? Let us know in the comments. And if you found this content useful, share, like, and subscribe to stay in the loop. Until next time, stay alert, stay strategic, and stay informed.